Welcome to Tracking IPDA. This week marked a significant growth in my trading journey as my understanding of price action deepens. My confidence is increasing and losses are becoming less impactful. Each loss now serves as an opportunity to analyze whether the trade is still valid and look for another entry point in the market. One key realization this week was the importance of placing entries at the 50% mark of the range. This approach helps me avoid missing the fair value gap, which isn't always visible on the time frame I'm watching. I also discovered that M1 price action within M15 PDAs offer excellent entry points with limited risk. This insight has not only enhanced my strategy, but also solidified my confidence in navigating the market more effectively. I finished the week with a 7.4 increase in equity. In dollar signs, we're talking $1,840. And overall, we're up on the account by 53.6%, which is $13,410. Let's get to hunting. Grab your tools. As always, we'll be looking at the charts in bar replay mode. This means that you won't be able to see my executions. However, you will be able to see my horizontal lines, which represent the time aspect of trading. The most important tool you need to track IPDA's movement: time. Now remember, even though I'm going to show you both buy and sell setups, it's important to know that your high probability trades will be in the direction of your weekly program. You can take counter trends with this model. For example, you can take sell setups, even if your higher time frame direction is bullish, and vice versa. It's just that your probability of winning reduces significantly when you go against the higher time frame directional bias. If you're new to trading, I do suggest only taking trades in the direction of your weekly program. We're going into this hunt with the understanding that you guys have already arrived at your higher time frame directional bias. This is a hunt purely for the setups. To the hunt, let's go. Monday, August 5th, trade of the day breakdown. We had the PM session sell formation. Let's get into it. As always, we start with the economic calendar, and as you can see, we had medium and high impact news come out at 9:45 and 10 a.m. Lunch session start, we trade above a key high. It was an AM session high. Displacement lower, causing a market structure shift below the key high. The displacement leg has a fair value gap SIBI near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter at the equilibrium of the range, which is the 50%, okay? So you would have been tagged in this trade right at the start of PM session at 1:30. You don't get to break even. You're taken out at 8 p.m. for a total time of 6 hours, 30 minutes in this trade. Drawdown in this trade was 583 ticks. All right. Bear in mind, this is a high time frame. Entries M15, okay, for a 2% drawdown, okay. So even though we took a loss, let's consider factors that made this trade a high probability setup. First, we had the time aspect. We're entering at the PM session, check. The range, we're in the middle to upper quadrant. We're in the premium for a sell, check. Liquidity, we don't have liquidity on this time frame, but we do have a lower M1 time frame high that it comes to take, and once it takes it, you see immediate reaction. So 3 out of 3 matching up to make this a high probability setup that lost you 2%, okay? Although this trade would have resulted in a loss, if you look on the M1 time frame inside of the M15 SIBI, we had a clean entry with less risk involved, okay? This is what I was talking about earlier, that I realized the M1 price action inside of M15 PD arrays offer you excellent entry points, all right? That limits the risk. For those that want extra confirmation before entering a trade or want to limit risk, this is excellent. However, it's important to note that this will not always occur, so prepare for many mixed trades. Due to the level of risk involved in this trade, I personally did this week waited for the M1 to give me an entry. As you can see right here, first I got in a trade and I took a loss. I'll explain it in a second. And then I got back in when they offered me a second opportunity to get in, and I made the money back for the week. So you can see 1:30 starts the PM session. We trade into the M15 CB that was formed after market structure shift. We're waiting for the swing low, comes into the 50% range into the M15 CB. It takes liquidity inside of the SIBI and displaces lower, leaving a fair value gap SIBI on the M1 time frame. Okay, so I entered in. Initially, I got in too early when it came in here on the 1 minute, took this liquidity here and displaced down and left this SIBI. I waited for 1:30 and then I entered in the SIBI, and as you can see, took a L. It came and took me out, took a loss. It comes back in, takes liquidity, displaces lower, leaves a fair value gap CB, and then I entered in here and rode it for a 1 to 3. So yeah, this is what I was saying about the M1 time frame inside of M15 PDA arrays offering excellent entries. So you could have actually entered at this CB. Your stop loss can go at the high. It can go at this high right here, or it can go at this high or a little bit higher. It's up to you where you want risk tolerance wise, but I would place it up here because I've noticed that once it does this high isn't usually tested. So yep, and you begin your 1 to 3. Yeah, and that was the trade. Even though because it was a higher time from M15, there was too much risk involved in this trade. If I had gotten at the 50% here and pull my stop loss at the high, I'd be risking like half of my account, which is a no. Okay, capital preservation is key for me. So with this trade, I waited for extra confirmation to enter the trade. Like I said, you're not always going to get that extra confirmation, so prepare for missed trade. But that was the trade of the day for Monday. Even though it resulted in a loss, I didn't lose on the day because I waited for extra confirmation and I knew what I was looking for in price. Tuesday, August 6th, trade of the day breakdown. We had a PM session self formation. Let's get into it. As always, we start with the economic calendar. And even though on Forest Factory, we didn't have any news on this day, if you look on Econo Day, we had the 8:30 high impact news. All right. So during the PM session, we had price trade above a key high. It was a lunch session high and also an old high. Displacement lower, causing a market structure shift below the key high. The displacement leg has a fair value gap SIBI near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter at the equilibrium of the range. This candle closure would have confirmed this swing low, and you would have been tagged in this trade at the 50% level on this candle right here at 325, breaking even at 4 o'clock, taking out the trade at 6 p.m. for a total time of 2 hours, 35 minutes in this trade. Drawdown in this trade was 11 ticks for a 6% bagged and tagged. Let's look at factors that made this trade a high probability setup. First, we had a time aspect is the PM session, check. The range, we're in the middle to upper quadrant, we're in the premium for a sell, check. Liquidity, we have a short-term high right here. The price comes and takes into the 50%. And as you can see, once it takes it, immediate reaction to the downside, letting you know you're on side. 3 out of 3 matching up to make this a high probability setup that netted you 6% for the day. I missed this entry for this trade as the fair value gap, above the 50% range was visible on the M2 time frame. Let me show you guys. It wasn't visible on here because usually I'm looking to enter on if it's an M1 or M5 setup. I'm looking to enter just the fair value gap level just above the 50%. It wasn't visible on the M5, but as you can see on the M2, which is a time frame I don't even look at on a regular basis. I just once the trading day was over, I analyzed the setup and to see where I could have entered the trade, which is what I do every day after my trading day. I see where I could have entered the trade, where I missed the trade. So yeah, through my analyzing the trade and going through the different time frames, I saw the M2 had a fair value gap CB right above the 50%, which was right here, which is a time frame I don't look at. Hence why I missed this. I missed this entry, and this is the trade that got me to realize, hey, just use the 50% range. It's easy, it's coming up there. That's the one guarantee. 50% just makes it less simple. And also I'm going to start teaching my family members soon, and they're really not going to understand to look for the fair value gap in different time frames. So just to make it easier for them to learn, I'm moving the entry to just the 50. Once the swing low is confirmed, you place your limit order at the 50%. It even tells you the price and everything, okay? Just to make it simple for everybody. So yeah, that was the trade of the day for Tuesday, and making adjustments as we go along. All right. This brings us to the end of tracking IPDA. I just want to add that analyzing trades and adjusting your model is crucial for long-term success in trading. Each trade provides valuable insights into what works and what doesn't. By regularly reviewing your trades and refine tuning your model, you stay adaptable, you improve your strategy, and you increase your chances of consistent profitability in this market. Okay. As traders, we have to be adaptable. We have to be able to adapt to the market conditions and see and analyze what's working and what's not working. Okay. Thank you guys for tuning in. See you all next week.